Okay, welcome Miguel team to another video. Today's video is going to be a learn to trade video for the Bollinger Bands. Now this video is going to be a short one. There really is not much to discuss about the Bollinger Bands. It's really not that much of an interesting indicator and you can't really use it solely by itself to enter and exit trades. It does provide a little bit of information about whether or not an asset is oversold or overbought, but its primary use is to identify perceived market volatility during a specific period of time. We do have one trading method we're going to be talking about today, which you can use the Bollinger Bands to actually take trades. It's called the squeeze strategy. We'll show you an example of this in recent price action, as well as we'll talk about how you can identify it and use it. So remember, like, comment, and subscribe. If you have any questions, remember, leave them down below. Links in our bio to our Twitter and our Telegram. It'd be great to see you guys there. Let's get straight into it. So the Bollinger Band is an indicator that provides a range within which the price of an asset typically trades. We can see the price generally trades between these two solid blue lines, and that is the range of which we were just describing. So the price will generally trade between these ranges, and we have slight deviations above and below. These deviations you can identify on the chart, or when the candle closes above or below, indicate oversold or overbought. So right here we had these two deviations. This would indicate a overbought asset, so OB, all right? And then we have these deviations down below, we can see here, and this would indicate, of course, oversold. All right, so that's how we can use that Bollinger Band to indicate whether an asset is overbought or oversold. When we have that price breach that top blue or bottom blue line and close above it, it generally indicates so. So how about volatility? We can also use the Bollinger Bands to determine current market volatility. Generally, the wider the Bollinger Band, the more volatility is present. So we can notice over here, during this rapid surge upwards, the Bollinger Band, this rapid surge upwards, spaced out a pretty considerable amount. We just zoom out over here, 126%. It really gapped out. It went nice and wide compared to the previous few day candles, which was only 31%. So we can see that Bollinger Band gets wider and also gets tighter as market volatility increases. So let's take a look at how we can use a Bollinger Band to actually make a trade. And this is why we're all here. We're going to move to a 15-minute chart, and we're actually going to be taking a look at some recent price action. And it's best to use this on, I would say, smaller time frames if you're going to be using the Bollinger Band to trade solely based on what the Bollinger Band is saying. If you can use the Bollinger Band in conjunction with other indicators on larger time frames to dictate or give you some idea or strengthen your opinions on where you think the price is going to be going in the long term. But this is a prime example of how to use a Bollinger Band. So we have two sections. We're gonna map them out for you. We have zone A, which is this zone here, and we have zone B, which is this zone here. So zone A, we can see, is very, very different if we look at the Bollinger Band price action to zone B. Zone A is a very high volatility zone. All right, so we'll say high volatility. All right, zone A, we can see a lot of chop, a lot of tight, a lot of huge gaps in that market, and basically huge volatility all around with these huge whips and gaps between our Bollinger Bands. So we have that high volatility zone followed by a tight consolidation. So a tight consolidation, the Bollinger Bands are tightening up. The bottom Bollinger Band line is getting very close and squeezing up against that top Bollinger Band line. This is indicating a potential price squeeze. So where we have this set up here, which is large volatility followed by immediate sideways consolidation and compression, we can generally expect an explosive move in either direction afterwards, which is exactly what we saw. The next thing we saw was an explosive move upwards for Bitcoin, and it was about a 3.5% move upwards in about an hour and a half, which is a considerable move for Bitcoin, and definitely some nice profits if you caught along on that. Now, how do we know when this is coming? So we're waiting for a break above and a candle to close above our upper or below our lower blue trend, blue line for our Bollinger Band. As you can see on this candle, we're going to zoom in. We can see that price closed above, which indicated a a push higher was coming and a move upwards was coming. That would be your entry signal, and your long position would take place. We saw about a 3.5% move upwards. So that is how you use that squeeze strategy. You have that high volatility zone followed by an immediate consolidation, and then you're going to enter based on where the price breaks according to the Bollinger Band. It can also go the other way. If the price immediately drops below the blue line, it's going to indicate a short signal and you will sell. Alright guys, I hope you enjoyed the video. There really isn't much to cover about the Bollinger Bands. It isn't used much separately. This is one of the strategies I will only take a look at every now and again. It is one that I do often use, but you won't often see this setup occur on larger time frames. It is more common to be found on smaller time frames. As always, if you have any questions, leave them down below and I will see you in the next video.